On the podcast this week, we follow in the footsteps of the great Charlie Munger to work out exactly how we can destroy your finance function. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6- and 7-figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancott, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. So this week, Claire, you've been particularly disappointed because there's been a major announcement in our town, which is the closing of your favourite lunch place, isn't it?
Oh, yes, Stratton's. It's a very old butcher's shop. Well, it originally was a butcher's. And
51 years established.
Do you know what? It's really quite... I think it's fair to say it's hit the town hard, because this is the place that at Christmas time, the queues are down the road. Everybody goes there for their Christmas turkey. You know, it started originally as a butcher's shop and then it's sort of branched out into being like a deli. They do like smash burgers. They've got like a hot food counter at lunchtime. Yeah. And the queues are out the door most lunchtimes, aren't they?
It's a very successul business. Or is it? So that's the problem.
Well, and
it rolls off the tongue.
It's shutting down because they've said they put it on the market about 4 weeks ago, but they've said that it's increasingly difficult to turn a profit and that the losses are now so great that they have just decided to shut the shop instead of trying to sell it.
Yeah. And it's at the same time that I don't know whether people are seeing this up and down the UK, but, you know, it's the same time that a number of businesses have gone on the sale market. Town. There's a coffee shop, independent coffee shop. They're all independent businesses. Independent party business as well. I mean, some of the stuff is like shocking. I mean, the coffee shop turned over £62,000, didn't it, in its sale particulars, which, how can you turn over £62,000, pay rent, pay staff, pay costs, pay business? I mean, you can't make any money out of that. So hardly surprising on that one. But
Stratton's, I would suggest that they're doing like multi-6-figure turnover.
Absolutely.
And I think
that's big business. They've got so many different strands. They're diversified a lot of the year. So they had the whole dark kitchen thing, the Deliveroo burgers and all the rest of it. They've got the massive lunchtime trade, hot and cold lunch stuff, and the butchers. I mean, it seemed to have everything, didn't it?
On the face of it, you would think that was a very, very successful business. However, I've often commented, you know, we go in there and we get like a lunch wrap or a lunch baguette, and they're humongous. You will struggle to finish that. It's certainly not getting like a meal deal with any crisps or anything like that with it, that's for sure. And it's around £7.50, which, okay, that is expensive as far as like a lunch sandwich goes. But I think for what you're getting, actually, I think that should be priced more like £10 to £12. And therefore, by the time it's hot food as well,
so by the time, your head around, isn't it? This idea that you pay £10 for a sandwich at lunchtime when you can still get a meal deal in Tesco for £3.50.
Yeah, but
it's hard, isn't it?
It's like 4 or 5 times the size of a meal deal.
Right. But do you want that much at lunch? That's the question.
Well, I mean, look, I would pay that price, but yeah, look, I thought the writing was on the wall a little bit. It was so popular, the portions were so big, and the quality of the ingredients was so good that you know, when you start to look with your accountant's head on, you think, is this really profitable?
I think this sector's just really struggling. Hospitality in general is going to be so difficult. Minimum wage, national insurance, we know that, and plus, you know, diminishing numbers and big chains coming in, and you know, we've had a Greggs come into the town. That's not going to help the situation either. It's fun to watch, but I'll be intrigued to see whether it's what people are seeing in their towns and cities around the UK as well, or whether it's just we have a really crap town.
Yeah, absolutely.
Don't know,
I think that smaller businesses giving up, essentially.
Yes, that is essentially the thing. Just waving the white flag now, aren't they?
And just saying, look, this is too much now. Like the time, the effort, the money, the impact on your personal life that it has of running a business, the rewards are just no longer worth it.
But we could go down a real rabbit hole here with this, but the chains don't suffer. We went to Wetherspoons this morning, rammed. Greggs are doing great. You know, you've got all these. So
sorry, I'm just going to stop you there and interject, because we actually went into Wetherspoons last night. It looks like we frequent Wetherspoons all the time. There's not many places in our town if you want to go for a drink, so Wetherspoons is kind of where we end up going most of the time. But Saturday night in Wetherspoons, and it was 50% full. And I think that's a big change from back 10 years ago when I first moved to the town, and going out on a Friday, Saturday evening, you'd go to Wetherspoons beforehand and it would be standing room only. You would not get a table. So I disagree, and I do think that Wetherspoons is struggling. I cannot remember the last time that we went into Wetherspoons and struggled to get a seat.
But I don't think any of the chains are really struggling. The reality is if the demand's there, my point that I was trying to get at is it just good government strategy that, you know, because they seem to be doing this with landlords as well in that sector, that they want to consolidate. They want big corporations to sort of own the roost, so to speak. And it's just easier to control the taxes. It's perhaps more reliable to control the taxes. It feels like, all the policy is pushing things that direction. You can't survive with one branch of anything anymore. You have to have a big chain. You have to be a big business.
Yeah, I don't agree with that statement that they want consolidation and they want big businesses. I think that the government genuinely do want small businesses. They're just not doing things to support them. Like Stratton's, for example, one of the things that they stated was
how could they want small businesses?
One of the things that Stratton stated was that this new regulation around removing rubbish from buildings, and particularly like food premises. So you've now got to like separate all your rubbish out and things like that. And they're just like, let's just put the costs like that up for regulation's sake.
I guess name something that's been actually enacted that would help a small business survive. Yeah. Like a policy or something they put forward that.
Well, I don't think there is anything. That's a problem. It's just like...
Well, that's what I mean by... But that's why I disagreed with when you said, I think they want small business to survive. But I don't think they do. I don't think they're not doing anything.
Yeah.
So I can't see how that's... Yeah. You can't say one thing and do another, but anyway.
Should we move on to more positive news? Because there are some businesses that are turning a stonking profit.
Yeah, and they happen to be the big chains, the irony. Let's move on to this week's news story of the week. So, this week's news story of the week, harking onto the conversation we've just had, is Amazon joins the UK's £1 billion tax club after rising sales. So this is the story that Amazon last year joined a very small and select group of UK businesses that actually paid more than £1 billion in direct taxes. And when I mean direct taxes, that's not VAT and things like that. That's their direct taxes as a business after profit. So
corporation tax, essentially. Is that what we're saying? Or does it include national insurance?
I'll be really honest, there's 3 numbers in this article. I'm going to give you the 3 numbers. It's very confusing because the total amount of tax that Amazon collected, quote unquote, for the government last year was £5.8 billion.
And that's going to be VAT.
That's everything.
That's going to be PAYE taxes that are deducted from their employees' pay.
Yes. The direct taxes paid by the company have rose from 932 million in 2023 to more than 1 billion, which includes corporation tax, business rates and digital services tax, right?
Okay.
So it doesn't really include national insurance. And then there's a third number, which is about 3.4 billion, which includes VAT, national insurance contributions for the staff as well. So there's kind of a number of numbers knocking about here. But I think what they're trying to say is like that elusive number of like when you've paid all your turnover taxes and you've made a profit, this is your direct taxes you paid, and they've entered the £1 billion club. Now, interestingly, up until 2023, Amazon didn't pay any corporation tax.
Yep.
And it was because of lots of government incentives and loopholes around digital companies and this super deduction element, which I don't know whether you know much about that.
That was something... So I think it was Rishi Sunak or maybe Boris Johnson introduced this. Essentially, when you make capital expenditure, so when you invest in like long-term assets, so, IT equipment, plant and machinery, even to some degree, buildings and things like that. So not the shells of buildings, but what goes into them to, make an Amazon fulfillment center, for example. So there's generally been a rule that you can claim annual investment allowance, which means that you can deduct those costs from your profit up front, 100% of them. And annual investment allowance over the years, I think the lowest it's ever been is like 100,000 up to at the moment is 1 million. Okay. So your first 1 million you can deduct from your profit and it reduces the tax that you pay. And anything over 1 million sits into what we call a written down tax depreciation. So you can write a portion of it off every year against your profits. Okay. With the super deduction though, it allowed you to, I think it was unlimited amount of capital expenditure, and you didn't just get 100% of the cost, you got a little bonus, you got 130% of the cost.
Yeah, I remember that.
So for every £1 you spent, you could deduct £1.30 from your taxable profits.
Okay.
So Amazon would have made a huge investment into the UK, no doubt, in fulfillment centres and upgrading things, and all of this would have gone against the super deduction tax.
Which eradicated all of their tax on their profits, so to speak.
Now, people would argue, the big companies were just using this as a loophole to pay no tax. But actually, it did mean that Amazon made humongous investment
in this country
at a time when we needed that investment, because I think it was bought in, I think 2021, they introduced this super deduction.
Yeah.
So,
Okay, finally, there are 5 other companies in the UK that Amazon have joined the
5.
£1 billion direct tax take. Can you name them, Claire? How many of the 5 do you think you can get?
Okay. So they have to be a UK limited company.
Yep, they have to be UK limited company.
Next.
Yep. Tick.
Okay.
Number 1, next.
Okay, so I'm on the right sort of lines here. I think that Tesco's might be in there.
No.
Okay. Shell?
No. No.
Jesus.
Close though.
BP?
Yep, BP. BP's, so that's 2.
AstraZeneca?
No, but you're on the right lines. It is a medical company. It's an acronym of 3 letters, but I don't know whether you know this. It's GSK.
Oh, yeah.
GlaxoSmithKline.
Yeah.
GlaxoSmithKline. So pharmaceuticals. Yeah. The last 2, where does all the UK's money come from? Like, what's our biggest industry? Our biggest export?
I was going to say maybe HSBC.
Well, that's not a UK company, so...
Are they not registered in the UK?
Hong Kong Shanghai Banking Corporation.
Yeah, but I would have expected them to have a UK arm. Because, Amazon isn't a British company either, is it?
No, but they're not a headline British company. But you're on the right line.
Yeah,
so
something
what are
in financial services.
What are the big British... The big British banks?
Yeah, but I'm trying to think of what the biggest one would be. No, I don't know. What's the biggest one?
Well, there's 2. You've got NatWest and Lloyds.
Oh, okay.
So obviously the 2 big ones. So banks and oil. And amazing that Next are in there. They really are a supersonic company, aren't they? But to make it into that list with pharmaceuticals, banks and oil, which is really the backbone of Britain, that is impressive.
I think what people underestimate when they think about Next, though, is that people think that Next is just a chain of retail stores, and it's not. Actually, the distribution arm to Next is far bigger than the retail element. They completely
nailed their online offering. And the bricks and clicks thing. They just nailed it, and nobody else really did. So they probably hoovered up a lot of kind of the Debenhams type of world and things like that didn't really... Yeah.
Evolve. I mean, they're just good at distribution. They've done a similar model to what Amazon's done. They're very effective at distribution. They can do same-day delivery, next-day delivery, all of that kind of stuff. And they do delivery for like the big names like Florence and Fred and ASOS and all of those types of brands distribute through
consolidate
Next.
Yes. Yeah. And you always said they absolutely nailed their distribution network in terms of the speed, because speed means everything after Amazon being around. And they are one of the few where... Well, you always complain about John Lewis, don't you?
I never shop at John Lewis anymore unless I absolutely have to.
Delivery's like a week or something.
I have to wait like 3 or 4 days for something to come to my local Waitrose store for me to then have to go and get it. It's not even delivered to my door. And I just think with Amazon, if you can't get it to somebody's door within 2 days, then nobody will buy from you unless they have to.
I would agree. Brilliant. Well, there you go. How long do you think it'll be before you join the £1 billion tax club, Claire?
Give me about 2 years.
Okay. We'll catch up then. Right. Let's have some fun and move on to this week's deep dive. So this week, Claire, this is a really interesting approach to things. This idea of mine came because I was sat next to you on a call you were having, like a discovery call with a client. And this particular client, nice big business, over £5 million turnover. And they went through all of these things and the challenges that they had in their business. And I realised that actually, we talk a lot about the solutions on this podcast, but we rarely invert to the problem that people can really, truly relate to. And when I say this, is I'm harking on to the late Charlie Munger, who's Warren Buffett's business partner at Berkshire Hathaway. And one of his massive philosophies that I've always looked up to and always used, or frameworks, is he would say always invert. So a good example of this, let me just give you a bit of an example of one. He would say hiring an employee. So he said, instead of asking the question, what makes a great employee, he would invert the question and said, what would make a terrible employee? And if you can describe what would make a terrible employee, so for example, dishonest, unreliable, poor communicator, resistant to learning, you can then start to really understand what not to go for, if that makes sense. So what I wanted to do is say, if I wanted to run a terrible finance department in my business, what should I be doing? Does that make sense?
Yeah.
So effectively, how not to run a successful finance function. And have a bit of fun with this.
It would be interesting as well, because sometimes when you listen to like podcasts and stuff, it's easy to hear what people suggest you should be doing. And then you think, oh, I've got to get around to implementing that or something. Whereas when you hear somebody saying it's really stupid if you do this, and then you're like,
that's how we run.
That's what we do.
And I think that is kind of where I think this framework from Charlie Munger is very, very powerful, because what it does is that it helps people recognise that they have a problem because they're doing it that way. And just a lot of these came from the list that this particular business owner listed off to you as the way they currently run their business. And you pick that up and you put solutions together and you turn that around. So we're going to start with number one, which is you put somebody in charge of your finance function who's inexperienced and unqualified.
Yeah.
That's what I'd do first. That's what I'd definitely do. I'd definitely say, I'd definitely go and find somebody that, like, maybe they're the receptionist at the moment or something. I'd definitely just say, can you just run the finance department for me?
Yes.
Do the bookkeeping, give me some numbers at the end of the month and let's see where we are. I don't really know because I'm not experienced, so I'm not qualified. So I don't know whether you're doing that right or not, but can you just do it?
Do you know what, actually, if you looked at most small businesses and you said to the business owner, who is actually responsible for your finance department, some people might say, oh, that's normally a PA or like the office manager or something like that, and they tend to have this tied into their job role. Sometimes it is like a bookkeeper.
Yeah.
But could they, a bookkeeper would never in the real world get a job as head of finance in a larger organisation.
Yeah.
So are they really equipped to be head of finance in a small organisation?
Yeah.
No, they're not. They don't have the experience, they don't have the skills, and they probably don't have a qualification either. But in a lot of small businesses, actually, when you say who's in charge of finance, it's actually the MD, is you.
Yeah.
And most MDs don't have a background in finance and don't have the skills and experience to run an efficient finance department or know what should be put in place for it.
How somebody could do that, so to speak, yeah.
Yeah, so I think that'd probably be like the biggest mistake that everybody could make. And it's just simply not having somebody actually accountable as your head of finance. And, I use the term head of finance like loosely. You don't need to give it as a job title or something.
But the accountability sits in that particular function.
Yeah, and responsibility for making sure everything from a finance perspective is running smoothly. Where does that sit?
Brilliant. So I'm on track to destroy my business.
Okay.
So the second thing that I would do is I would definitely use an accountant that's been recommended to me by my parents or even my grandparents before them because they always use them.
Yeah.
And I definitely wouldn't ever compare them to the wider market to see whether they're any good or not.
Or someone you found on Google.
Yeah.
Just like, oh, your local accountant, the first one comes up on
That's
Google.
The second thing
Can they take me?
Do.
Yes.
And people do that, don't they? And that's...
Do you know what? Like, it is... I think this brings me back to generally if we think about why we trust people, because that's ultimately what somebody's doing here when they pick an accountant, is they're trusting that person knows more than them. And when you go to your GP, you don't think about questioning your doctor and their experience and things like that, do you?
This is true.
And it's a similar thing with an accountant. You put your faith in that person because they're advertising themselves as an accountant, and you assume that they've got the skills required to do what you need. And unfortunately, that's not the case, because a lot of accountants that are advertising their services are literally experienced in doing year end, VAT returns, payroll, year end, basic bookkeeping. They're not really experienced in driving performance in a business and understanding about management accounts and understanding about what a finance function looks like in an organisation, what processes you need, what systems you need, all of that kind of stuff. It's a different skill set, different experience.
And if they've been handed down through generation and generation, they're probably not as cutting edge with where they need to be with
definitely.
Current practices and the most efficient practice and the best tools they could be recommended for you to use in your business. Because, some of the great accountants are putting forward some of the best tech, aren't they, for you to integrate into your business across the whole thing to make your life easier.
I always, we live in our own little bubble here in Profit Cash Growth because we're not like a traditional accountancy firm. And I always get a bit of a wake-up call when we come to recruit. And obviously we've had a couple of new starters start this week, and when you're interviewing candidates that work at different accountancy firms and you hear what they do and you say to people, how often do you look at management accounts? And they're like, well, we never do that. And I'm thinking, but you're an accountant. And it's that type of thing that you realise how other accountancy firms run. And also somebody that is actively looking to buy other accountancy firms, I'd say 99% of accountancy firms I would never buy because they don't utilise tech. They don't even say to their customers, you must be on Xero or anything like that. They'll literally still accept boxes of receipts and all of that kind of stuff. So, an accountant is not equal to an accountant. You've got to remember that.
Well, I think you've moved me nicely onto the third thing I do to definitely destroy my finance function. And that is to do things manually. So I think what I'd do is I'd probably have a spreadsheet running to keep tabs of where all my invoices are. I'd probably print off invoices and, sign them directly as the owner to approve them before my bookkeeper does them. All those type of things.
Key them into the system.
Yeah.
Key all the data in. So you'd have to enter the invoice number, the description, the value.
I reckon I'd do that.
All of that type of stuff.
What else would you do manually?
I'd probably manually try and calculate what my profit is. Like as the business owner, I'd keep a different spreadsheet that kind of calculated what my profit was and not use what was in the system.
Good idea. I'd probably try and manually create a cash flow forecast as well, not using any data. And
set up a Word or Excel document to create sales invoices. Yep. Absolutely, I'd do that.
Great one, yeah.
Yeah.
I'd try and, really struggle to know what the last invoice number was I used. So I'd have to open up the last Word document to make sure I use the next invoice number on it.
Yeah, look, we're being a little bit tongue-in-cheek here, but I think what we're getting at is not using the technology
systemization
that's available. So, things like if you're still entering invoices manually into your system, if you're using Word templates to create sales invoices, all that kind of stuff, technology has moved on a lot, and all of that stuff is just, highly automated these days. And what that means is when you can automate that, you don't have to pay somebody to do data entry that a computer can do, and instead you're paying people to solve problems and move things forward. Yeah.
And actually this is combined with the next one that I would do is I would definitely duplicate some of those tasks.
Yes. Yeah, so what I would do is I'd key all my invoices into Xero, but then I'd also put them on a spreadsheet as well so I can keep tab of what's owed.
Yeah.
Obviously, that's the logical thing to do.
Not rely on the system at all. I'd just try and have a separate spreadsheet because that's the way I'm used to using it and seeing it.
Yeah.
Like half my foot in the water and half out of the water.
I think number 4, so duplicating tasks, I think that is the most common thing that I see is...
Yeah.
People keeping spreadsheets or a list of invoices so they know who to pay and when, and they know what customers owe them money. And I just always shake my head and I'm just like, why are you not just looking on Xero? That's live data on Xero. We can get exactly the same information out of Xero. It's never, Xero's never gone wrong and lost something.
No. In fact, the whole purpose of it is more likely to not create human error with typos and duplications
all
and
of that kind of
copy
stuff.
And pastes and things like that. That's
accidentally
the point.
Putting a zero on an invoice and paying somebody wrong, all of those types of things.
Exactly the point.
Yeah.
Good. So the 5th thing that I would do to make sure that I'm really destroying my business and my finance function is, because I'm a bit of a control freak as well, I'm going to pay all the bills as the business owner.
Yeah.
Only I want to pay out the bank. I'm going to pay all of our suppliers.
But you're just going to do it willy-nilly. So when the invoice comes in,
I'm not going to think about it. If the invoice comes in, I want it off my desk. So I'm just going to pay it as soon as I can pay it, and then I'll pass it to the receptionist to key it into her spreadsheet. That's what I do.
Yeah.
Yeah.
No, look, we're being a bit tongue-in-cheek here, aren't we, with some of these?
So why shouldn't... But again, we're inverting, aren't we? So why shouldn't I, as a business owner, be making all the payments? Can I really trust somebody else to do that?
You don't need to trust somebody else to make payments. So there's a few ways around that. So firstly, a lot of businesses that I've worked with might have... Okay, so it's 2025. Let's start with the most basic things, is you can set controls on the bank. So if you give somebody access to the bank, they can only make certain payments under a certain limit, and they've got a daily limit. So you can limit your exposure. Or you can have a separate bank account that has a limited amount of money in it that you transfer money into just for payments out. Again, limits your exposure. But what we suggest is that you use technology. We recommend a system called Apron. Somebody can set up all of the payments, enter the bank details, put the due dates in, all of that kind of stuff gets done in Apron. And then you get an email to authorise all the payments in bulk on your bank in one go.
Yep. So you still have the control.
So you still have the control.
And you're not physically doing the payments yourself, and you're not doing them every time inefficiently. You're doing a single payment run.
Yes. And I think that's the thing there as well, is that it's a controlled process. So however frequently you need to pay your suppliers, for a lot of businesses that might be once a month, we can move them to, and then you might have the occasional ad hoc thing come up throughout the month. But certainly it shouldn't be this thing where somebody's got a list or a pile of invoices on their desk or something, and that they're just paid every time a due date comes up, we pay an invoice. That generally isn't how you keep control of your cash flow.
Nope. And talking about keeping control, if that's what I'm doing for my purchases coming in, number 6 is if people haven't paid me on time, my customers, I'm not going to chase them. I haven't got time for that. And I'm definitely not going to give them a reminder before the due date. I'm just not going to have a process around credit control.
Yeah.
I just think it's the best way to destroy my finance function in my business.
Well, it's a waste of time, isn't it? when you can just focus on getting more sales in and not worry about whether anybody's paying you or not. Why would you have credit control?
Who cares?
Exactly. Oh, I'm finding this really difficult because this is like everything I've ever preached about and spoken about. I have to pretend doesn't matter for this. But yeah, credit control. I mean, the main thing with credit control is you should be doing it up front. Whereas a lot of businesses will wait until something's overdue before they take action. And it's very reactive, not proactive, and not being in control of it. Yeah,
and we've done entire episodes on what a great credit control function looks like. So do go and dig them out. And finally, because I heard this one.
We've got one more after this.
Okay. So the one before the final one is...
the penultimate.
The penultimate one. Because I heard somebody say this as well. So let's say I have been I've been a little bit proactive and, I have got myself zero. I've got myself an accounting system. But I've got like multiple companies. I've got 10 companies. But what I'm going to do is I'm going to run them all through one Xero account.
Yeah.
Yeah, that's what I'm going to do.
Because that saves you about £25 a month on Xero subscription. So it's a no-brainer to do that.
No-brainer to do that. Yeah. It saves me a few £100 not having separate Xero organisations for each of the organisations. I'm just going to run them all through one. And then, I've just got a feeling that I'll have complete clarity of my numbers and I'll be able to make individual decisions on each of the individual businesses based on that.
Yeah.
Is that right?
God, well, look, we have unpicked a few businesses that does this, and
they probably have separate spreadsheets for each of the businesses, so it's not a problem.
Yeah,
so
they're duplicating everything outside of Xero because Xero doesn't make sense because they've just stuck everything into Xero. But yeah, you need to have a separate system for each organisation. One of the limitations with Xero is that you can set up multiple companies. So as a user, you have a login, and you can have as many companies on Xero linked to your login that very easy to switch between. Yeah. But Xero doesn't have any functionality to make things smoother. So when you have multiple companies, it's common that you've got intercompany transactions of some kind. Maybe there might be like head office recharges. So you're raising invoices to the other companies or like payments out of the wrong bank and things like that. Xero doesn't have any functionality to support that at all. We work with various pieces of software. One of them's like Mayday, is a really good intercompany tool. It's quite expensive. But there are various things you can do to try and automate that as much as possible. But yeah, absolutely. If you've got different organisations, you need to have them in different Xero packages. You cannot just lump them all into one and hope for the best. What I also would say is that when you have separate entities, you then also need to bring them together for what would, in the technical term, be called consolidated reporting. So you would essentially end up with a management accounts report that says this is how your group performs, but this is how each of the individual entities perform.
Excellent. And final?
Final one is I just never look at the numbers.
You're just not going to bother even...
Well, what is the point? I mean, it's all dog shit anyway based on all the processes that we do above, isn't it? So you can't ever look at the numbers because nothing is really working. Some stuff's on the spreadsheet, some's not in the system yet because we're double entering everything. We've got no time to do anything.
I know what I'm definitely going to do then. I'm just going to run my business from the bank account.
Yes.
I'm just going to run it from the bank account.
Now we are talking.
Now we're talking. High five that. That is definitely the thing I'm going to do to, really destroy my business.
And do you know what? It's really funny because I think that every single one of those problems that we've just talked about comes back to number one. The very first thing we said is putting somebody inexperienced as your head of finance.
You can actually put the process and systems in place for the whole of the rest of the finance function that fixes everything. Yeah, got it.
Yeah. But I mean, if you don't have somebody that can think about the end picture and think about the numbers that you need out of the system, then they're not worried about the why it's important that we do this at this time of the month, or why it's important that we put the payroll journal into the system every month and not just at year end, or why it's important that we might need to make a tax estimation every month. If they don't understand the end result of trying to get accurate numbers every month so that we can drive the business performance, they don't understand why the processes matter.
Excellent. Well, there's a reason that Charlie Munger is was one of the richest people in the world, and that's because his framework of always invert makes you think differently.
Do you know what I think? It was quite fun to do as well. It's just sometimes it just like relieves the pressure a little bit, because there would absolutely be people listening to this thinking, I do that in my business. And it just almost like you can be a bit tongue-in-cheek about it, and you can be a little bit like, yeah, that'd be stupid, wouldn't it? Rather than it being this whole thing of like, let's sit down and figure out everything that doesn't work and everything we should be doing. It's like, let's just like go back to basics, write down everything that would make like a car crash business, and then we'll just see how many of them apply to us. And it just feels a little bit lighter and a little bit easier to do with your team. In fact, we're going to be looking at our onboarding process next week with the team. So I think this is something that we might do. What would make a really bad onboarding process?
Yes. Yeah.
And how can we get always as far away from that as possible?
I've done this as well with selling houses before, where I always sort of sit down with someone saying, why would somebody not buy this house? What are the reasons that somebody wouldn't want to buy this house? And it totally flips it in a totally different way and makes you think more about how to solve those issues when you say that. So brilliant. Well, let's move on to this week's Profit Cash Growth Extra then, Claire.
So this is something that I stumbled across, and we use a system called Engager app, which is kind of like practice management software. So it keeps track of all of our deadlines, all of our customer information, HMRC links, all of that kind of stuff is in there. And it's web-based. And I kept finding that it just wasn't at the forefront of my mind and also my team's mind. So we have all of our deadlines in there and like checklists. So you have to sort of use it to work through your day-to-day work. And people weren't ticking checklists off because it was just like a web app that they had to log on to and update. So I found out that when I was in Google Chrome, what you can do is if you click on the 3 dots in the top right-hand side, it's slightly different on all the different web browsers, but essentially most of them work the same. So in Google Chrome, click on the dots and you want the option that says like cast, share and save or something like that. And then you select install as web app. And what that does is it puts a shortcut on your desktop and which you can then ping to your taskbar, but it essentially turns it into an app for your desktop instead. So you're always logged into it. It's always there like at your fingertips. Okay. And it also just removes all of the browser like fluff from the top. So you can't navigate away from it by thinking, oh, I just need to go and do that task. And you click on a website and it's gone out of your mind.
Okay.
So you're still in a browser. You're still on the internet. It's still live. It's just a different kind of way of your system. Basically, your computer kind of keeps everything live at your fingertips rather than having to log onto a web browser and do it. Cool. So you can install as a web app.
Sounds good. Brilliant. Well, thank you for joining us for another week's podcast. Hope you enjoyed that. As always, if you know anybody that will really benefit from this, please share this episode. Just find the button that says copy link and send it over to a text message. Anybody that owns a business, I think, will benefit from these episodes. And please rate, review and subscribe. And if you'd like to work with Claire and the team at Profit Cash Growth and you feel like you may have outgrown your accountant, you can nip over to profitcashgrowth.com, book a discovery call. You can order a free copy of Claire's book on there. Or there's also a resources library with lots and lots of free, lovely stuff. And as always, we will see you again next week.